Then, 5 tax secrets the IRS hopes gig workers never discover. Chat. Hook. 00045. Uber drivers and DoorDash couriers overpay by $2,400 every single year because no one tells them these deductions exist. I want you to think about that number for a second. $2,400. That's almost 3 months of car payments. That's a vacation you deserved but couldn't afford. That's money sitting in the government's pocket right now that legally belongs to you. And here's what makes me genuinely angry about this situation. The IRS isn't breaking any laws by keeping quiet. They're not required to teach you how to pay less in taxes. Their job is to collect, not educate. So while you're grinding through traffic, dealing with difficult customers, and putting serious miles on your vehicle, the system is designed to take more from you than it should. But not after today, because I'm about to show you 5 completely legal tax secrets that could put thousands back in your pocket this year. Hand to intro 045 2 Kai. Here's the problem nobody talks about when you start gig work. When you were a regular W-2 employee, your employer handled almost everything. They withheld your taxes, they paid half your Social Security, and they gave you a nice little form at the end of the year. But the moment you became an independent contractor, you inherited a small business without anyone teaching you how to run one. You became your own accountant, your own HR department, and your own tax strategist overnight. The gig economy companies know this. Uber, Lyft, DoorDash, Instacart, they all benefit from keeping you in the dark about what you can write off. Because here's the dirty little secret. The less you know about deductions, the more money you show as income, and the better their contractor model looks to investors. They're not going to send you a tutorial on reducing your tax burden. That's not their job, and honestly, it's not in their interest. So you end up paying taxes on money you never really earned as profit just because you didn't know what you were entitled to claim. Let's fix that right now, starting with the biggest one most gig workers completely miss. 1. The actual mileage deduction math, 2 to 330. The first secret is that most gig workers are tracking their mileage completely wrong, and it's costing them a fortune. In 2024, the IRS standard mileage rate is 67 cents per mile. That sounds simple enough, but here's what almost nobody understands. You can deduct miles from the moment you turn on your app looking for a ride, not just the miles when a passenger is in your car or food is in your back seat. Let me paint a picture for you. Maria drives for DoorDash in Phoenix. She leaves her house, drives 8 miles to a busy restaurant area, turns on her app, drives around for 20 minutes before getting her first order, completes 3 deliveries over the next 2 hours covering 42 miles, then drives 12 miles home. Most drivers would only count those 42 delivery miles. But Maria can legally deduct all of it, every single mile from when she left home, with the intention of working until she returned. That's 62 miles, not 42. At 67 cents per mile, she just found an extra $13 in deductions from a single shift. Now multiply that across a full year of driving. If you're putting in 20 hours a week, those uncounted deadhead miles, those miles between orders, those positioning miles, they add up to thousands of dollars you're leaving on the table. The key is documentation. You need a mileage tracking app running from the moment you start working until you stop. Gridwise, Stride, Everlance, these are all free and they run in the background. The IRS accepts digital logs, but they need to show date, destination, business purpose, and total miles. Start tracking everything tomorrow, not next week, tomorrow. 2. The home office deduction nobody claims, 330 to 5 unqualified. Secret number 2 is going to surprise you because most gig workers assume they don't qualify for a home office deduction. You absolutely do, and it's easier to claim than you think. The IRS allows anyone who uses part of their home regularly and exclusively for business to take this deduction. And as a gig worker, you have a business. Think about where you sit when you're checking your earnings, responding to customer issues, tracking your mileage, or planning your routes. If you have a dedicated space, even if it's just a corner of your bedroom with a small desk, that counts. The simplified method lets you deduct $5 per square foot of your home office, up to 300 square feet. That's $1,500 in potential deductions just for having a dedicated workspace. You don't need receipts, you don't need to calculate your utility percentages. You just measure the space and multiply. I know what you're thinking. James, I work in my car, not at a desk. But here's the reality. Every gig worker has administrative tasks. You're tracking expenses, you're filing quarterly taxes, you're managing multiple app accounts, you're researching better strategies. That's business administration, and it happens somewhere in your home. The IRS isn't going to knock on your door and measure your desk space. But they will reject your deduction if you can't prove the space is used exclusively for business. So don't claim your kitchen table where you also eat dinner. Set up an actual workspace, even a small one, document it with photos, and take the deduction you deserve. 3. The health insurance secret that changes everything. 5. Son 630. Here's secret number 3, and this one alone can save you thousands. If you're paying for your own health insurance and you're showing a net profit from your gig work, you can deduct 100% of your health insurance premiums directly from your income. This isn't an itemized deduction that most people can't use anymore. This is an above-the-line deduction that reduces your adjusted gross income before anything else gets calculated. Let me break down what this means with real numbers. Derek drives for Lyft and makes $52,000 a year after expenses. He pays $600 a month for a marketplace health plan for himself and his wife. That's $7,200 a year in premiums. Without knowing about this deduction, Derek would pay self-employment tax and income tax on that full $52,000. But with this deduction, his taxable income drops to $44,800. Depending on his tax bracket, that's easily saving him $1,500 to $2,000 in actual tax owed. The catch is that you must show a profit from self-employment, and the deduction can't exceed your net self-employment income. But for most full-time gig workers, this is a non-issue. You're showing profit, you're paying for health insurance out of pocket, and you're entitled to this deduction. If you're using a basic tax software, look for the line about self-employed health insurance. If you're using an accountant who doesn't ask about this, find a new accountant. And if you want to get really organized with all these deductions, I actually put together a complete gig worker finance tracker at geordix.gumroad.com that helps you track everything in one place, so you never miss a write-off again. 4. Phone and internet write-offs, 630, 730. Secret number 4 is hiding in your pocket right now. Your phone isn't just a phone anymore, it's a business tool, and the portion you use for gig work is tax deductible. The same goes for your home internet if you use it to manage your gig business. Here's how the math works. If you estimate that 50% of your phone usage is for gig work, accepting orders, navigating, communicating with customers, tracking miles, then 50% of your phone bill is deductible. If your monthly bill is $80, that's $480 a year in deductions. Add in a portion of your internet bill for those admin tasks we talked about earlier, and you're looking at another $300 to $400. The IRS doesn't require you to have a separate business phone, but you do need to make a reasonable estimate of business versus personal use and be able to justify it if asked. 5. The quarterly tax payment trick, 730, 830. The fifth secret isn't about a new deduction, it's about keeping more of your money throughout the year. As a self-employed gig worker, you're required to pay estimated taxes quarterly. But here's what the IRS doesn't advertise. If you pay at least 100% of last year's tax liability spread across 4 quarterly payments, you won't owe any penalties, even if you end up owing more at tax time. This is called the safe harbor rule, and it's a game changer for gig workers with variable income. Instead of trying to guess exactly what you'll owe and stressing about underpayment penalties, you just divide last year's total tax bill by 4 and pay that amount each quarter. If your income goes up and you owe more in April, you pay it then without any penalty. This gives you breathing room, reduces stress, and lets you keep more cash available throughout the year for emergencies or investments. Key takeaway, 830, 930. Let me bring this all together because I don't want you to feel overwhelmed. The tax system wasn't designed with gig workers in mind. It was built for traditional employees and large corporations who have entire teams handling this stuff. But every secret I just shared with you is completely legal, completely accessible, and completely within your reach starting today. The real takeaway here is this: you are running a business. It might not